Today we're going to talk about how life insurance can be your secret investment weapon. Before we get into life insurance being your secret investment weapon, it's important that you begin to understand the different types of life insurance. We're going to focus on two that you need to understand: term life insurance and whole life insurance. So term, really cheap, right? Renting a death benefit. Basically, it's there for a short period of time. Once that time expires, that coverage goes away. Then you look at whole life. Whole life can be more expensive, and I'll put that in quotes, but it has living benefits, it builds up cash value, and it has a permanent death benefit. The idea is that this coverage will be there for your entire life. If you think about renting an apartment versus buying an apartment, as long as you're paying, you have it. With whole life, it's permanent, but you are also building up equity. It's not going to ever expire unless you cancel it or sell it. Let's think about this though. With term life insurance, a little different than an apartment, right? So an apartment, you might rent it, and yeah, as long as you're paying for it, you have it. But at a certain period of time, with term life insurance, you're not going to be able to rent it anymore because that time is going to expire. And one thing is going to happen: that level guaranteed premium that you had is going to increase substantially. And the insurance companies do it that way specifically because they don't want to pay that death benefit. So they're going to make the price of that insurance so high that you really only have two, maybe three options. One option would be to lapse the coverage so you don't have it anymore. Two would be to go through new underwriting and get new coverage. Or three, you can pay that premium, but the only person that would really pay that premium is somebody that is already terminally ill. So the insurance company knows, right? And they're really smart at this. About 2% of all term life insurances actually pay a death benefit. And that's completely different than whole life insurance, which builds up cash value and gives you an equity stake inside of that policy. And at a certain point, there will be more cash value in that whole life insurance than you actually put into the plan. So now what you do is you have life insurance death benefit that you own, cash value that's more than what you put into the plan that you can access. So let's talk about how whole life insurance works. Let's say you have a death benefit of $500,000. Your payment may look something like $1,000 a month or $12,000 a year, and a portion of that will go towards maintaining the death benefit, while the rest accelerates your cash value, which you can access in the short term if you set the policy up correctly. The concept that you've heard on this channel of infinite banking, that strategy where we overfund life insurance. So, in this slide example, I don't know, based on your age and your health, if $12,000 a year is going to cover a $500,000 death benefit. But what I do know is if you're looking to build cash value in your life insurance, you're going to most likely be less fixated on that death benefit, and you're going to be more worried about the cash value. We can show you how to design that policy properly to implement it so that you have that cash value early in the contract, and that it builds throughout the life of the contract. So potential benefits. On top of providing a permanent death benefit, a whole life insurance policy has the ability to work like your own personal bank. This provides guaranteed growth that can pay up to 10 to 12 times the national average for savings account, with the ability to leverage your savings in alternative investments. Let's think about this, right? We talked about building up that savings over time. When you have a savings account versus an emergency account, right? It starts to feel like, hey, I'm putting money away for emergency savings, and then all of a sudden an emergency happens, right? And that money gets wiped away. If you're building, you want to have a separate and sacred account that's meant for other investment opportunities. So you build and stack cash, and then you put it into other investments. That's what the whole life insurance can be used for, is to build and stack that cash to then put it into other investment opportunities. Another potential benefit, depending on the state, the money could be untouchable. As opposed to a typical bank, in most states, someone cannot litigate and access this money and pull it out of the account. It's completely yours. So what this means is, right, if you're getting into business or you're in a situation where, you know, assets can be litigated, meaning somebody comes after you, they want to sue you for something, life insurance generally is not touchable, right? That asset is a protected class, similar to an IRA or a 401k would be a protected class, but the cash in your bank account is not a protected class in litigation generally. So you have to check because state laws are different. So you got to check with your specific state. But for the most part, life insurance is looked at as this protected asset that people can't litigate against. Every time you make a payment into your bank account, the money grows tax deferred, can be borrowed tax deferred, and can be used as a retirement income stream tax free. And throughout the life of the plan, while you are using the money, you are getting uninterrupted compound interest. So this benefit that we're talking about, that tax-deferred growth and that tax-free access as a retirement income stream, can also be used as tax-free access early on in the plan. You don't have to wait till retirement. But the thing that you need to be aware of is making sure that contract's set up properly, right? We don't want to put so much money in that it ceases to be life insurance and becomes something else called a modified endowment contract, because that makes those benefits then subject to taxation. So definitely things to consider, but the idea of growing your money and having it be deferred from tax, accessing it with continued compounding interest, and then being able to leave a tax-free death benefit really helps you plan, because we're moving money today from a known tax bracket into the life insurance and using it in a manner where we're not going to pay taxes again on that. So let's talk about letting that money work for you. If your money ever only grows at a single-digit ROI, that will not be significantly different from a 401k or an IRA. But if you can borrow from yourself and diversify your investments, and you let your money grow at double-digit ROIs and then pay it back into your account, you will be letting your money work for you. So let's think about this, right? That single-digit ROI, that's what you're looking at in life insurance. And really what we're saying here is life insurance isn't the only answer to the retirement question, because single-digit only growth is only going to get you so far. That might be the path of building and working till you're 65 or 70 years old, like they're talking about, and then being able to retire. If you're on the fast track where you're looking to create financial freedom and you want to retire at an earlier age so you can enjoy that time, you're going to have to generate more returns from your dollars. What the life insurance can do is it can continue to grow and compound interest inside while you leverage that money into other investments. And it's in those other investments that you have to seek out the returns that are double and more on returns. So if you're here now, we're looking at how do you learn how to convert your assets into high-yielding ROIs? Well, one of the things that you can do is in the description, we left a link for you. Click on that link and one of the team members here will be able to reach out to you and help you design a custom game plan to figure out where you are today and where you want to get to and what are the right pieces to put in place for you. If you got some value from this video, please give it a like, share and subscribe, and continue to watch. We really appreciate it.